Hello, good afternoon, each and everyone that is logged on to today's session for the Institute of Research and Analysis Center. We are doing a presentation on an auditing-based topic, digitalization and the Internet of Things. The session will be a 1 hour session, and it will be more of an interactive session. It will be more of an interactive session, and there will be a time in which people will be required to ask questions so that the session won't be boring. But it will be done through IRAC, Samuel. Samuel will be handling that. So for now, we are live and we are about to start. The topic says digitalization and the Internet of Things. As we all know, we have moved past times in which people do things in their workplace, their business manually. We are currently living in a world that involves information technology, and that has made the whole world a global village. Today, I will be focusing my address or lecture on auditing. As we all know, it is one of the key factors that are responsible in ensuring that we have better and good financial institutions. And we all know all institutions have financial related things that they are doing. So for today, we'll be looking at different things. One, we'll be looking at the importance of audit and assurance linked with digitalization and Internet of Things. Secondly, we'll be looking at interpreting of financial statement disclosure. There's a whole international accounting standards that was developed in 2007 for financial records to be disclosed every year to the public by private and government institutions. It occurred based on the event or incident caused by the Lehman Brothers. During 2007, the world entered into a recession in which Lehman Brothers they were preparing their financials, and the auditors that were auditing these financials, they were manipulating figures. So it came to a time in which the company started to lose value and things went bad. The moment a proper auditing was done on the books of Lehman Brothers, the whole company crashed, and that particular company was valued more than $600 billion in dollars. It led the whole world into a recession. And we know the moment the American economy goes into recession, the economy of the whole world is crashed. So people that have the knowledge in developing accounting standards came together and say, we need to develop something that will be more efficient, in which people will not be cooking financial statements and financial records anymore. So they developed a whole accounting standard. They developed the whole accounting standard, which is disclosure in the financial statements of bank and similar financial institutions. It was developed in 1990, but it was modified in January 2007. It was modified in January 2007, IFRS 7. Before, it was IAS 30, International Accounting Standards 30. So it was modified to IFRS 7 that talks about disclosure. This whole thing came into play because of the incident that occurred in the era of the Lehman Brothers, which saw the world into recession. So I'll start with audit and assurance. What is an assurance? In the contextual meaning of accounting, finance, and auditing. An assurance is a situation in which an auditor gives an opinion about certain information that they have gathered by reviewing and interpreting the financial information of a firm's record. What are these financial informations? Financial informations are figures, wordings, and all relevant documents and information put together by the management of a firm. Mind you, most times people do mistake these things that the financials of a firm is prepared by the auditor. It doesn't work that way. It doesn't happen that way. So here comes into play in a situation where the auditor uses certain tools to assess this financial information. The auditor uses certain tools to assess this financial information. And then, after all this assessment, an opinion is given based on what they have gathered. And this opinion should be bias free. The auditor should act in a professional manner and should be seen as a professional. For all this to happen in a proper way and in a professional way, the world has digitalized and we can make good use of the internet. So there are times in which we have IT professionals that has developed certain key softwares that are used in identifying the risk, material misstatements, and other things when the auditor uses to go through these financial records. Some of these software that are used are, we have the Sage. Sage is a software used by the finance department of a company to develop financial information. Here at IRAC, if you want to learn about Sage, we can guarantee that we will give you maximum support and all the knowledge you need to know about learning about Sage. There are other accounting softwares that we do teach people. For instance, the widely used software used in banks, which is Finacle. 90% of the banks in our present economy uses Finacle to prepare and work through their daily routine, rendering services to customers. We do teach people that also. As for Word, Excel, PowerPoint access, it is on our fingertip. So the point I'm trying to make here is the world has become so digitalized. If you want to be a proper accountant, a proper auditor, a proper business individual, you have to know these things. You have to know some of these things so that you can prepare your records in a better way. Better way in which you can avoid material misstatements, you can avoid errors, and you can be able to detect fraud in a situation wherein your employee or the people you are working with want to orchestrate a fraudulent activity. So back again to audit and assurance. Assurance, as I said earlier on, is an opinion given by a trusted professional auditor that the financials that are prepared by the management of this firm is free from bias, is free from fraud, and it is free from material misstatement. There's a difference between fraud and error. And there comes in the expectation gap. There's something we call expectation gap in auditing and finance. Expectation gap is a situation in which people that are not so knowledgeable about auditing, people that don't have the prerequisites, people that don't work within the scope of auditing and finance, do misunderstood things that are very simple and knowledgeable to understand. One, most times we think the financials are prepared by the audit firm. The financials is not prepared by the audit firm. Everything they need to know is being prepared by the management of the firm they are auditing. We have three parties involved in an auditing process. One, we have the practitioner. Two, we have the responsible party. The responsible party is the one that is responsible in preparing the financial statement of a company, a business, a bank, a government, and the likes. And then we have the intended users. For instance, now, Mr. Samuel Sise is the CEO of IAC, and I want to be part of IAC. I have some capital that I want to invest in IAC. Before investing that fund into IAC and ensuring that everything is okay, we need people that are independent minded that will come in and examine the financials, the work that Mr. Samuel has been doing to know if it has the potential to go above the level it is presently, or to know if it is actually making the amount of profit that will convince me to invest into IRAC. That is one. Secondly, we do auditing to ensure that proper controls and structures are in place. That is why the financial statement of a company does not only involve figures. Auditing process for an auditor to give an assured and reliable opinion, you need to evaluate the sales department if it's a sales company, the human resource, the way in which they recruit people. A recruitment process should be fair and fair. The competent people should be put into these positions to ensure that whatever the individual is doing, he or she knows what is he or she is capable of handling so that we can get the best results from the company. So the 5 elements involves in auditing, as I said earlier on, we have the practitioner, the responsible party, and the subject matter, the intended users rather. This makes up of one. That is one. The other four are the subject matter, appropriate and sufficient evidence. These days, auditing has moved beyond the point in which people just give opinion because they want to give opinion. That was in the 70s, 80s, in which there were less accounting standards that has been developed by professors that do develop these standards. We have auditing standards that must be followed in ensuring that proper auditing procedures are carried out. So, as I said earlier on, we have the three parties involved, which make up of one, the practitioner, the intended users, and the responsible party. We have the subject matter also. The subject matter is the financial statement, is the subject matter. And then we have the suitable criteria. These suitable criteria are the auditing procedures that we use. When carrying out an audit, we normally don't audit, let me say, each and everything in the financials. We do sampling. That is why a whole auditing standard was developed, which is 520 audit sampling. We normally do sampling. We take these samples and then we evaluate them. In evaluating these samples, we find out that there are risks, due processes were not followed. And how do we know that due processes were not followed? We have tests of controls that we normally do. This test of control helps to guide the auditors to know whether the firm has been acting within the regulatory standards of the firm. Mind you, each institution have a developed policy. And then we also have financial international accounting standards. We also have auditing standards. Each of these things are to be followed by the latter. That is why there are things we should avoid when choosing the practitioner that should audit a firm, which are conflicts of interest. For instance, Charles here is my best friend. I can't appoint Charles as my auditor to audit my firm. There is no way he will do a proper job. There are certain things that he will let go to cover my integrity. And because at the end of the day, as IAS 30 says, disclosure should be made in a financial statement that has been audited. This financial statement will be published to the public. for the public to have a view on it. So I can't appoint Charles. Charles will be very biased. He wants to be independent. And an auditor should be seen as an independent person and should act as an independent person. So in carrying out all these exercises, we have softwares that we use to audit financial statements of organizations and government parastatals. And there are procedures. One, we have the test data testing, which is manually done. And then we have the software testing. Software testing, it has its own limitation based on the fact we found ourselves, we're in Africa, it costs a lot. So these are some of the disadvantages in using it. But trust me, if we want to have the required results and want to follow the process of digitalization that has been taking control over the world in present day society, we need to go by the software approach. Firms that are more equipped do normally use the software approach like KPMG, PwC, and PKF. That is why these firms are among the top auditing firms in the whole world, because they have moved past the era of just using data analysis. Data analysis, you need to input it for the computer to tell you that these and these are what have happened. Software approach, you install the software in the systems of this institution. The moment you install the software, that is why before getting into an audit, we have what we call audit planning. You have audit planning, you schedule the audit properly, you meet with management, you people agree the basis in which the auditing will be conducted. If it is a forensic audit, we know it goes beyond normal auditing. It involves legal procedures and reasonable doubt. It goes beyond reasonable doubt. There are times in which auditors doesn't go beyond that based on the criteria that has been agreed. But the moment we decide to go on a forensic auditing system, it tells you that it goes beyond all reasonable doubt, and whatever opinion that the auditor will be giving will be backed up by legal court action. So an audit, to carry out an audit, we normally have the audit procedures. We have the audit planning. During this audit planning, the auditor meets with the client, they discuss the processes and the principles regarding the audit before the start of the audit, and whatever that might come out of it, a signed document has been laid. The client makes a request that I want Charles to audit my firm. Charles, as a professional, looks at all the things involved. If he doesn't want to get himself in something that he knows will deter his reputation, he has the opportunity to decline. And also, the client has the opportunity and the chance and every power to change an auditor. But normally, audits reviewed are done every year. And if it pleases the client to maintain an auditor, they will continue with the contract. But normally, these contracts are signed for 5 years. So, as I was saying, the software approach in auditing a firm is the most reliable, though it is too costly and it is not cost effective at this part of the world, because how many financial institutions or how many companies exist for BKT or KPMG or PKF and these other little firms to buy this software? And mind you, these softwares are licensed software. Every year you need to pay fees to license, so you need the license. So they are constrained. That is why auditing procedures and processes normally takes a lot of time in this part of the world. When you're using the software, all you need to do is to have access to the system of the client. You have an engagement meeting, you interview the people that are responsible in handling this financial statement. After the interview, you install. After this interview, you install the software. There has a chip. You install it in each and every individual laptop or desktop that is being used. Or you can have access to the server room or the server system. After all this installation has been done, you can have access to the whole system. And that will help you to be more independent. because the things that are hidden will come to light. And another thing we need to make clear is the auditing process is not a witch hunting. Auditors don't conduct audits to catch thieves. Auditing is a process in which an auditor gives a professional opinion so that whoever has to come in contact with the financial that has been prepared will have the confidence that these accounts are prepared according to the financial regulatory standards, according to the policies of this institution. That is why the digitalization of things has made it so prominent for people to make use of that opportunity, because we can gather whatever information we need to have and make use of it in an appropriate manner. To obtain evidences from a client is very difficult. There are times most people have the mentality that if I might have done something wrong, the auditor will expose. The auditor only have to make a general opinion at the end of the audit that this and this and this are what we find out, and this and this and this are what should be done in ensuring that the next time when the books are being examined, we won't see all of these mishappenings that have taken place in the previous financial year. If they can go beyond in handling fraud, then they can detect fraud. But the objective of an auditor or an assurance engagement officer is to give a reasonable advice or a reasonable opinion backed up with sufficient and appropriate evidence. You can have a sufficient evidence, but if it is not appropriate, then it doesn't qualify for that particular financial statement to be given the leverage and attention you might think it needs to be given. That is why the two words are embedded together. They say sufficient and appropriate evidence. It goes with sufficient and appropriate evidence. The two are twin, they are intertwined. It goes in the same line and in the same direction. Mr. Sami, people can ask questions now, and if you want to ask questions, you can do it to Sami. I think I've been speaking for quite a long now. People can ask questions so we can understand ourselves better. I'm open to questions.
If anyone to ask a question, please just raise your hand so I will just unmute you.
If you want to ask a question, you can just raise up your hand, then you can be on mute. Then you can ask the question that you have in mind.
Yes, Mr. Sam, I want to ask a question, sir.
Okay, sir.
Yeah, in Sierra Leone, which organizations are liable to be audited? Is it enterprise registered businesses or company? Or what is the process?
The process of a company being audited,
yeah,
it all depends if you have a proper bookkeeping. You can write to any auditing firm. If you are operating an enterprise, you just need to have a proper bookkeeping. Most times, these auditing firms do act as advisors to businesses also. They can be tax advisors as well as carrying out audit processes. So if you have a business, you know you are keeping a proper record of it. You can write to any firm that I want my books to be audited.
Okay.
So Yeah.
Okay, thank you. I think there's another person, Mr. Mohammed. Go ahead, sir.
Me, right?
Yeah, yes, yes.
Okay. Mr. Sami, I have two
Yeah.
questions.
Okay.
One, I want to know like if like audit Sierra Leone, since they are the supreme audit head in Sierra Leone to regulate like the government auditing, like the MDAs and the ministries, are they reliable to audit, to be audited?
The government institutions,
Yes,
are the
like
government
audit Sierra Leone,
institutions,
like audit Sierra
audit,
Leone.
yes, audit service Sierra Leone, if they are audited
Yeah, are they
or if
reliable
they
to
are
be
the only
audited?
one, well, yes, but normally these things happen. The government, if they thought it fit that there are certain things that are happening that are not correct,
Okay.
they can bring in an independent body. If we are following when change of governance occurred, an auditing firm was taken from Ghana to audit the books of certain institutions. So, audit service Sierra Leone, they are auditing other people and they are also liable to be audited.
Okay. One more question.
Okay.
Like, how can we assess the, like, for example, if you are working in UBA Bank or like in any MDAs, how can you assess the effectiveness of the internal control systems like they are using?
Okay. As I said earlier on, there are policies and there are control measures. That is why we have internal auditor. When the external auditor comes in, the first people they speak with are the internal auditors. They work with the internal auditors because the role of the internal auditors is to ensure that they checkmate and work towards ensuring the bank or whatever financial institution have a proper control systems in place. That is the role of the internal auditor. But most times, why do firms do bring in external auditors is to have the independence and objectivity. Internal auditors are liable to bend the rules because of the relationship they might be having with their fellow employees in the company or in the institution. So we bring out external auditors who are independent to give a better opinion. They go through the books after the internal auditors might have gone through it. They also have the responsibility to come and go through these books.
Okay, I think that's all my question. Thank you.
Okay. Charles.
Um, yes, sir. Mr. Samuel, I just get one question for you. You earlier state that you try to distinguish between the ancient auditing and modern ways of auditing. Um,
Yeah.
According to my own understanding, I know that there are different types of audit reports presently, wherein you have the unqualified opinion, a qualified opinion, an adverse opinion, and a disclaimer of opinion. So,
Yeah.
looking at the current, the advanced way of auditing, I just want to know if there is any way wherein, when submitting the final reports, if the auditors use their own discretion to distinguish between those opinions to come with a final conclusion, or um, uh, or they do find out from that when asking these employees, like for example, when asking these employees the questions. So I want to know if it's in the initial stage, they know which type of audit reports, or it's after they've finished everything and when they are submitting the overall reports to their boss. So I want to know in the modern
Okay.
way how they do distinguish that.
That's a very good one. Um, as you rightly said, there are standards that has been established to determine whether an audit or an auditor gives an unqualified opinion, a qualified opinion. An unqualified opinion is a situation in which an auditor states that the financial are free from all material misstatement. That is an unqualified audit report. And it happens, an auditor opinion happens after the whole auditing has been conducted. They don't give
Okay.
opinions during the process. The only thing, if they are find out certain things that are not correct, they query the people, the officers that are in charge. You see, if they are in the admin department that are responsible for expenses, allocating expenses and the likes, and they'll find out that certain things are not happening properly with the way expenses are being allocated, they call in the individual that is in charge of that. You query that person, and clarifications will be made. An unqualified audit report is a situation in which no fraud has been detected, no material misstatement that might lead the company or the institution to bankruptcy or going concern. You understand? That's an unqualified one. So opinions are formed after the end of the audit when preparing the report, when preparing the auditing report. That is when opinions are formed. As I said earlier on, auditing is conducted to form an opinion. Auditors form opinion. They don't catch thieves or detect fraud. There are situations in which fraud are always liable to be detected. You can't rule that out. There are certain things they look out for. There are tests of controls that need to be conducted. There are reasonability tests that needs to be done, and all the likes. That is why before the start of the audit engagement, procedures must be followed. There are approaches that must be followed. So opinions are formed after the audit report, after the audits have been conducted. Like you said, there are qualified and unqualified audit reports. These opinions are only formed after. You can't judge a situation if you are in the middle of it. So Charles, I think I've answered your question. Any other question? Manuel?
Hello.
And an auditor now. Cherry? Yeah.
Yeah, good evening.
Yeah, good evening.
Thank you very much, Mr. Yain. My question is that, hello?
I'm getting you, sir.
My question is
Hello?
that, yeah. Hello?
Hello? Yeah, I'm getting you.
Okay. I said my question is that during the audit planning or in the process of the audit itself, how can we make get complete information so we can carry on the audit proper? Because
You request. Hello?
yes.
Hello?
Did you get the question?
Can you reiterate what you just said? Your line is somehow bad.
Yeah. I'm at the provinces, Makeni specifically.
Okay. You said during the auditing process, what? I didn't get it clear.
Yes, during the audit process or
Yeah.
the audit during the audit planning or the audit process, how can we make sure we get complete information to carry on the audit process? Because I was faced with let me just explain a scenario. Years
Okay.
back, audit a farm in Bo. Yes. So after the audit engagement, we started the process, and on the audit process, we requested for some information that we wanted to carry on the audit with. But the department that we are auditing, they refused to give the information.
They refuse to give the files.
Yeah, the files. Me lacking.
They refuse to give you the files. Okay.
So I went and then took the files from the shelf and then started the process. Then later on, my boss corrected me and said, no, if they don't give you the file, then you have to make sure you wait. So I just want to know your own take or your own part concerning that. How can we ensure we get the complete information in such cases arise?
Okay. Now, before the auditing process, before the engagement process kickstart, there was an entry meeting. You did an entry meeting with various
Sure.
departments, right? There were agreements that the audit will be conducted in this way, and these are the things we will need. And with time to time, we'll be requesting for these things, right? You
Yes,
have
sir.
already set up your test of controls and all other things to gather information to prepare a proper report at the end of the day. In a situation where you request for a file, and then maybe if it's the subordinate refuses to give you the file, you have the responsibility to speak with the team lead of the department. Because most times, the way it happens, the team leader will instruct his or her subordinate that whenever you are not sure of certain things or ever think you might be finding difficult to respond to, you send the auditor to me. That's the way it happens. You send the auditor to me. So in a situation wherein maybe a junior worker refuses to give you a file or certain information, you have the responsibility as a professional to meet your boss or your own team leader and report the matter that I requested for X, B, C, and this file, and they have refused to give it to me. So your boss or the team leader of the audit team will speak with the head of that particular department and they can find a common ground. That was why it told you that you shouldn't have taken that file because each and every file that will be taken from a particular office will be documented. And after the whole process, when you turn in these files, the client needs to see that all my files are in order and I am returned completely in a proper manner. So you can't go to a shelf of a client and take a file all in the name of because you are an auditor. It doesn't work that way. That is why most times staff or clients do see us as witch hunters. They do normally have that kind of mentality about auditors. And when in real life, the job of an auditor is just to form an opinion about whatever work these individuals have been carrying on for a particular period of time. So, in as much as most times we tend to be very rigid for them to understand that I'm doing my job, you also need to find a way in cajoling them to give you whatever you want so that your work will be done properly. You don't want to report a half report that is not completely filed and everything. So in such situation, you report those situations to your own boss. He or she can contact the team leader of that particular department and you can find a way in which solutions will be provided. So the audit will go on smoothly.
Okay.
I think that has answered your question, sir.
Yeah. Thank you very much.
Thank you. Okay. Um, Looking for
Okay.
more questions because we are learning. It's a process. If there are no questions, people can still listen, and then after I've said
Okay.
certain things, you can come in again. And
Mr. Samuel.
yes, sir.
Yes. Okay. This is a true story. Yeah? I just need an advice. My background is not from the auditing, but anyways, we know that the purpose of an audit is to provide an objective, independent examination of a financial statement, which increases the value and credibility of the financial statements produced by management. And okay, there are cases because I am a sales administrator for the company I work for. So in terms of all sales, yes, I deal with all sales, including filing from the start of the transaction till the transaction is finished. So like I'm fortunate to always have that close interaction with the auditors. There was one time there was an auditing firm that came to audit us internally actually. But he requested for some certain files and where he needs clarifications. So I presented those files to him and he went through those files and asked some questions which I clarified to him. But on returning the files, he had to misplace the document. And each of those files, I have a task file.
Okay.
They are certain that must be with it. And apart
Hello.
from that auditing firm, NRA also come around to audit us also. And in case
Okay.
of they don't see that, it will be an issue on my end. So
Okay.
I brought it to the man.
Yeah.
His approach towards the issue was, I gave you all the documents. He was trying to argue me and all. And I said, no. I said, in fact, I listed everything for you and it's in the list I gave you. I said, so this document is missing and I don't know, perhaps he might have joined it with the other department. And then I went straight to my boss to discuss it with her. And then she said she would handle it. So in cases of like, let me say, if something like that, if they come again, if they come around, how will I approach such?
Okay, Mr. Charles. It's Mr. Charles. I think the purpose of this of this lecture is for us to know the essence of digitalization and the Internet of Things when handling auditing problems and providing solutions. In a situation like this, documents that you think that are very sensitive,
Yeah.
you have to scan them. You scan those documents and keep them in your system. So whenever an auditor misplaces a document and you know other government regulatory auditors are going to ask for those documents, you give them your system or you print it for them again so they can have a full view and access about it. So it's a two-way approach. You always need to have a backup.
Okay.
Hmm? We have something we call BCP, Business Continuity Plan. A business continuity plan is a situation in which each and every institution should have a backup in case crash or other incidents occurred that are beyond our control. You have to have a backup. Set up a backup system in which your files will be stored, especially for auditing purposes. So in a situation where you've made certain sales, and you know auditor normally comes after huge sales. Let's say for instance you made a sale of $100,000 or $50,000 or $120,000. They will be interested in going through those files to know if the proper procedure was taken in ensuring the sale was done properly. So in things like that, you scan those documents and keep them, or you generate those documents through the system. As you know, we are living in a digitalized world now. You generate some of these documents through the system, where you print them, you do your transactions, scan them, and save them again. The filing system is very good, but also to be on the safer side, you need to be scanning and keeping those documents that you think that are of high importance. Hello, hello.
Yes, Sammy, I have a question for you.
Okay,
Two questions actually. The
okay.
first one, is it compulsory to give an auditor any file they requested for? Is it compulsory?
Yeah, yes. Hence, it has to do with the running of the business. Whatever file an auditor requested for should be given. If
Um,
you fail to give the auditor the file,
the
it will
right
be
report.
included in the report that we requested for so and so to examine certain things. The files were not given to us. We hope next time when we return, you will correct these things, and because they need to examine the books so to form a proper and independent and professional opinion about the financial statements or the financials of the company. So
Um,
whatever is of interest that the auditor needs should be provided. Hence, it is within the scope of the audit.
okay. Then lastly, um, what are the criteria to register an auditing firm in Sierra Leone?
Okay, there are certain criteria, but I think you need to check with Audit Service Sierra Leone. They are the one that regulate the auditing firms in town. They give the license. One, the head of the team or the individual that wants to establish the audit firm must be registered as a chartered accountant. That is one. You can't operate an auditing firm now without the partner, the auditing partner being chartered. That is
Okay,
one.
sir.
So there are certain processes that needs to be adhered to, and it is regulated by um, Audit Service Ministry of Finance.
Okay. All right, sir. Thank you very much.
Yeah,
Um,
yeah. Any question? If there is no question, we move to communicating with those charged with governance.
no, hold on. I think there is
As a
one more
special,
question.
okay,
Yes, Mr. Simeon.
Um, good morning from my side, sir. Thank you
okay,
for the opportunity.
welcome, sir.
I actually want to ask, like, I want to know the duration of an auditing firm. Like, what's the duration of time they give to an auditing firm to audit a business or a company? Is it a fixed
Well,
duration, or you
well,
can be auditing whenever you want?
no, you can't be auditing whenever you want. An auditing is conducted at the end of a financial year. Financial year, it varies. Some firms, the financial year starts from January 1st to December 31st. After December 31st, the rights to auditors to come in and examine their books. That is why when carrying out an audit before the start of the engagement, there is an entry meeting wherein the terms and conditions of the audit will be agreed. It won't be static. Some clients do request for 3 months, some do request for 1 month, some do request for. But the auditor, there are times in which they normally finish before the stipulated time that they might have agreed on. And there are times, the more things they find out, the more the delay, I won't say the delay, the more time they take in ensuring that each and every procedure is followed. So it is not static. But an auditing is
Okay, sir.
conducted
Thank you very much.
after the financial year. But we normally have pre-audits, let's say maybe 6 months or 8 months into the financial year. Auditors do comes in, check the books to see if the recommendations they made in the previous audit has been corrected or has been followed. Then after the end of the financial year, when the financial has been prepared or will have been prepared, the client writes to the audit firm that she wants her books to be audited. So the period is not fixed.
Okay,
It
sir.
can be a month, it can be two, it can be less than 2 months, it can be less than a month. It all depends to the scope and how big the audit will be.
Okay, sir. Thank you very much.
Okay. Thank you. So as I was saying, we have those charged with the responsibility of carrying out an audit. Corporate governance, there is an international accounting auditing standard, which is ISA 260. Communication charged with those in charge of governance in a financial institution or in an institution. When auditing the financials of a company, the financials of a company involve five key things. We have the income statement, which we normally call the profit and loss statement, statement of financial position, which we normally call the balance sheet. We have the cash flow, we have the issue of shares, and then we also have other explanatory notes. The income statement shows whether the company is making a profit or a loss. The balance sheet shows the financial strength of the company. It determines the number of assets and liability that the company has. It determines the total number of assets and liability that the company has. Whether we have more assets or whether the company has more liability. Liability involve loans taken from banks and other places. Asset, we have the cash, which is the current asset. We have the fixed asset. We have the venture and other things. So when auditing a financial of a company, these are the five things that needs to be audited. One, the income statement, statement of financial position, the cash flow, issue of shares or the shares, and the explanatory notes. At the end of every financial, management has explanatory notes that they do back up with whatever slice of things that will be in the financials. So that is why whenever an audit is conducted, whatever findings that might come out of the audit, you communicate it with those charged with corporate governance or with those charged with governance in running the institution. So that is the point. As Charles was asking about, someone was asking about the refusal of giving files. The auditor communicates that to the people in charge of the company or the head of the institution that did invite them to do the audit. We also have materiality in planning. Materiality in planning in an audit is to ensure that whatever will be done during the audit process should yield material. We also have what we call evidence, ISA 500. You can't obtain an evidence if you do not carry out sampling and test. We also have what we call audit sampling. This sampling, that is why auditing is the process that is not 100% accurate because samples are collected. We collect samples and run a test of controls. We normally don't ask for all the files in a particular department. You do a sample and ask for a few files. You run your test and see whether due processes has been followed in carrying out the activities of the organization. So these are the key things when carrying out an audit. Whatever opinion you want to form or whatever opinion you're about to form, you will back it up with an evidence, not just only evidence, sufficient and appropriate evidence. Sufficient and appropriate evidence is the catchy word there. You can't just present an evidence that is not sufficient to support your opinion that you have formed about the work of someone else. The individual will argue to the latter. That is why most times in certain institutions you see auditors and employees are having loggerheads with each other or one another in clarification of certain things that the auditor might need clarification about. If there is not sufficient evidence to the claims of the auditor or the opinion that the auditor is about to form, the client will argue, or the individual in charge of that particular department will argue out that this, and this is what is the right thing. Then it's left to the auditor to provide the evidence now that this was not properly done, this was not properly done, this was not properly done. That is why we are querying you. That is why we are asking you this question. What went wrong? There are certain things that were not followed with the due process and policies of the company, backed up with the ISAs and IAS. So these are the things. The digitalization of financial procedures, auditing procedures will help firms. And for accountants and auditors to be on the safer side, we need to be aware. We need to know these softwares. We need to know these things. You can't give what you don't have. You can't carry out a proper audit if you don't know Excel properly. You can't carry out a proper audit if you don't know some of the software that these firms are using. Because You do random sampling, you do sampling to collect evidences or to collect whatever material you need to back up your claims. So it will be better for us who have or who are intending to establish companies, setting up institutions, to be thinking about digitalizing things. So to have a smooth running and to have proper controls of our institutions. Thank you. So I can entertain one more question before the close of the program. And views and comments I encourage also. Whatever input someone wants to make, you can come in and give your input. We are running out of time. We have only 3 minutes left.
So I'm sure there is no any
Okay.
comment so far.
Okay.
Thank you very much, Mr. Samuel Koroma, for your time and for these great lectures and also answering all questions. We do appreciate it, and we pray you get more wisdom. And also thank you all for joining today's session, today's conference. And I believe everybody so far have learned something. And I'm not an auditor, and most of you guys are not even auditors, but I believe you have learned something for the future. And you always get prepared. I believe whatever you have learned today will be used in the future to guide whatever auditing process you'll be undergoing. So I really want to appreciate you all. You can, this video of this conference is being recorded. So as you can see from your screen, you can see the recording there. So I will do the editing and be posting it on our YouTube channel. As you can see the message, also sending it again. So you can just click on it, the link, and that will take you directly to our YouTube channel, and you can subscribe. So immediately we post the video of this conference, you can get it as well. You can also share this link as well to colleagues and other groups so that they can also benefit from it as well. And also, let me put the email as well so we can send a PowerPoint presentation. So we can send a PowerPoint presentation to you if you request for it. So kindly, for now, I want to say thank you. Next week again, we'll be here same time at 4 p.m. with another part which will be on entrepreneurship mindset, values, ethics, and critics of entrepreneurship education. So like I've been saying, is it right for entrepreneurs who always say, I started my business with only one tin tomato or a packet of black meat, and today I have a big mansion of an organization? So join us again next week for this, and on Friday, Saturday, and Sunday we'll be sharing the link as well. So please be part of this, and trust me, you're gonna learn something from it as well. So for every comment, for any comment you have, or any suggestion, you can also send to our email, or you can go to our Facebook page, just search for the name. You can see Facebook page, our LinkedIn, and also on Twitter as well. So you can send in your comment or any suggestion or anything you want to give any input. You can also just send us mail and we can respond ASAP. Thank you very much for your time and have a lovely week ahead of you. and stay safe. COVID-19 is real.
Thank you. Thank you.
Yeah.
Thank you.
Yeah.
Thank you. Thank you. Thank you.